Let's get the bigger picture. Jeffrey Small is with us, President, Arbor Financial. Let's talk about what's going on in your mind. I mean, we just had NVIDIA. I think that was an important one. What say you?
Well, there was no doubt the market's hopes going forward, the secular AI boom and the secular growers of the big mega cap, big tech stocks were severely dependent on the numbers that NVIDIA produced yesterday. And they did produce great numbers. They were actually stellar, up 122% in top line number, 170% in profit was up, 75% margins. And so for every $100 NVIDIA makes, they make $56 and they get to keep that as profit. That's a ridiculous number compared to the mega cap, big tech stocks. But NVIDIA's numbers are slowing down. And so quarter over quarter, it only went up 15% on the top and bottom line numbers. And if it did maintain that 15% growth for the next 12 months, we would see the stock rise approximately $82 from where it is today to around $202. And so I say NVIDIA is a buy. These dips right now are a bargain for one of the greatest growth plays in history, Nicole.
Yeah, and look, you're talking about NVIDIA. You also think Meta's right up there, too. This is your 1-2 punch.
It really is, if you want to use this boxing metaphor here. Meta and NVIDIA have been the two best stocks here the last 30 months in the market to own. And it's kind of ironic. What do they have in common? They've got incredible fundamentals. Meta just outperformed dramatically. Their quarterly earnings were up 73% year over year. That's a phenomenal number. Their user base expanded another 7% to 3.3 billion. They control 75% of the internet. They're the most of advertising, that is, of internet advertising. They are the most undervalued Mag 7 stock in the market today at 26 times earnings. And, as long as their earnings keep growing, this stock's going to grow. My 12-month price target is $600 in 12 months from here. I think that's very easy for them to accomplish at this stage.
All right. So what's the final here when you think about some of the other names in the Mag 7? I mean, let's keep on this for a moment before we get to some of the other topics. But, I think about the Magnificent Seven, the whole group. Is the whole group pretty interesting to you or not necessarily?
Well, I do love the whole group, Nicole, but I didn't realize we'd be talking about the other four today, but that's okay. I think Microsoft is a phenomenal buy at this price right now. They've got great upside. Of course, they're in the middle of the AI boom, as well as Apple. Apple is really, starting to gain traction. They've got their big announcement coming out on what's going to happen with their phones. We're expecting a super cycle here sometime midpoint next year to occur as AI is integrated into their cell phones. And so I think those are also great plays to have. Tesla has lots of promise. If they can master their autonomous driving here in November, we'll see where they are, what the stage of that is. And so, Netflix is doing incredibly well, too. So all of these companies are secular growers for the long term. And even though we have some rotational leadership changes in the market today, due to the decline in rates, these Mag 7 stocks will not be affected to the upside by rates falling by Federal Reserve action when the Fed lowers rates. The broader market will, especially in the small cap arena. And so those companies have more of an upside effect when rates are adjusted to the downside. And so in the meantime, though, I'm a firm believer you've got to have these secular growers in your portfolio for the long term, Nicole.
It's interesting because also, as you said about the group, and you didn't have to go through each one. Thank you. It was very nice of you to do that. But it sounds like you're more optimistic than pessimistic. I mean, the Dow's hitting new intraday highs today. We could see another record close for the Dow. I mean, who would have thunk it, right? So you're generally positive? I mean, what's going to drive the market higher? You think the Fed will cut as expected, maybe elections are noise, and we power higher because earnings are better? I mean, what's going to be the catalyst?
Well, the catalyst there's two catalysts to drive the market higher, and that is earnings have to expand and increase, and money has to become cheaper. Credit's got to become cheaper. We need to see rates fall. Those two things will help propel the market. But what won't help the market at all next year after the election, Nicole, is if corporate tax rates go up. The Democratic Party wants to increase corporate taxes. That just incentivizes companies to move their companies offshore, and it undermines the middle class. That is a giant mistake. And I'm not getting political, but it's just a reality that we're facing here in a few months.
Look, I mean, when they have to pay more in taxes, they pay more in taxes, and that means more from their money. And, when they have demand to pay higher wages, that means more from the money. And when they were uncertain about the health care plans, That means more from the balance sheet of these companies. And, you know, it's also the uncertainty. They don't know how to set up the balance sheet to prepare for the costs going forward because they don't know how those will change. I'll give you the final word here on anything else. I mean, commodities, Jay Powell, the election, anything else you want to add in here, Jeffrey?
Well, I think I would lean towards making a comment about the election. And, you know, I think we need to vote for the policies that are going to mobilize the middle class to become more economically dominant and recapture what they've lost in a very high era of inflation. As you go to Walmart, as you go to Target, as you go to your grocery store chain in your locality, and you look around and see what people are buying, you can see that their carts are not as full as they were just 3 years ago. And I think we have to bear that in mind. So vote for economics. Don't vote for a party. Vote for who's going to empower you economically is my message today, Nicole.
Yeah. Okay. Good to see you, Jeffrey Small, Arbor Financial. Thank you so much.